For more information, visit davma.org. That's davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zada and Mark Vendetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zada and Mark Vendetti.
Chuck, Mark, and Tucker with you here today, the day after the CPI data was released. And, well, we had quite the show yesterday. Hello. What we saw was that even with a hotter than anticipated CPI that caused yields to rise over the course of the day, you still had a banner day for equity markets with the S&P 500 up more than 1%, the NASDAQ up over 1.25%, and the Dow still up about 0.6% on the day, which might have caught some people by surprise, and we can talk about that as we go further. But I certainly heard from an awful lot of people, hey, it's just getting more bubbly out there. It's getting bubbly. I think the market's feeling a little bubbly. And look, we even get this piece in the Wall Street Journal that has the title, Froth the U.S. Stock Market Isn't Crazy Enough to Be a Bubble, which naturally the contrarian in everyone says, oh, well, if they're saying it's not a bubble, then it has to be a bubble. The thing that I continue to come back to is that valuation is absolutely useless as a tool for timing markets or understanding where they're going to go next. It simply does not have any predictive value about what is going to happen in the short term. So even if you correctly were to assess a market as being a bubble, it doesn't inherently mean that it's popping next week, next month, or even next year. And we know this because of the late 1990s, where if you look, and I'm not even going to look at the NASDAQ, but if you look at the S&P 500 and its returns by year, and go and look at the 1990s, what you see is a situation where, again, not looking at the NASDAQ, where, you had, 100% years, back-to-back years, I think. 95, up 37%, 96, up 22%, 97, up 33%, 98, up 28%, 99, up 21%, 5-year period where each year was above 20%. And there were plenty of people back in 1997 where, when long-term capital management blew up, the Asian currency crisis hit, a lot of people said, oh, gee, this is the bubble finally popping. And it didn't. The party went on for 2 more years.
The Fed stepped in 98 and quickly, I think it was a 75 basis point emergency reduction.
Sure.
So stocks did tumble.
But
they
not
very
for any
quickly
meaningful period of
rebounded
time.
over the course of 98.
Sure.
I believe the return was positive. So the Fed stepped in. Arguably, the long bull market of the 90s would have ended at that point had they not. So it's always hard to say whether look, the Fed took a lot of heat after the bubble, and we only knew it was a bubble in retrospect, though there were
Sure.
a lot of people, a lot of investment managers who stuck to their guns, said this is absolutely a bubble, I'm not buying these companies. Many of them went out of business. Many of them got fired by the consultants who put them on pension fund and other institutional type manager rosters. It was a tough time to be a value or just a growth at a reasonable price-oriented investor. It was a very hard time because the people that behaved most recklessly, in retrospect, and prospectively too, by the way,
Sure.
to buy a company with no earnings, no prospective earnings, whose business model you couldn't even explain, was arguably not the prudent thing to do.
We got users to a website, and we're going to sell them something.
Yeah, we all remember the metrics that replaced traditional, and when we say valuation, we mean price to earnings, price to sales.
Sure.
It's just a way to compare companies in a cross-section or a company to itself, its stock price, that is, over time. It's like price per square foot of your home. It's a nice, easy yardstick.
When we talk about, bubble or not, this is one of those things where kind of like recession or not, it doesn't really matter. Like, there's no formal definition even for a bubble. Like,
No, it's hard.
No one's come out and said, like, hey, it's a bubble when PE gets above X or Y, or it's a bubble when concentration looks like this, or it's a bubble when correlation looks like this. It's just kind of...
People do use
the bubble
that.
definition. It's kind of like what the Supreme Court said about pornography. You know it when you see it.
Yeah, it is a
It's kind of
subjective
the
thing.
best way that you can describe what a bubble is.
We could be a little more precise. I think if you Google it and you look at Investopedia or other commonly accessible resources, it talks about value being having diverged dramatically from fundamental value. So it's when the price gets out of whack. The example I gave yesterday was if all the houses on your street on a price per square foot basis suddenly doubled relative to houses on the street next door, on your left, and the street on your, say, right. That would be weird. Now, it's possible that maybe, I don't know, you just discovered oil on your property. That would be a fundamental change that would justify a doubling in price per square foot. This analogy doesn't work great, but it's an example of how things can sort of get out of whack relative to what reasonable people estimate fair value should be at. But the fact is you don't really know because you don't really know future earnings. Therefore, bubbles aren't identifiable as such until after the fact. Academic papers on this subject are all over the place. There's no common taxonomy. There's no bubble type A, bubble type B, bubble type C. Check off a few boxes and you know which bubble environment you're in. You just don't know until after the fact. That said, every massive run-up in valuation in the history of the U.S. stock market has been followed eventually by a crash. Crashes happen when stocks get expensive. They don't typically happen outside of some outside shock like a war or political upheaval. They don't happen when stocks are inexpensive. But that's almost trite to point that out.
Let me ask you what might be kind of a semantic question, but I do think it matters. When markets aren't in a bubble, do we even have a term for that? Like, what do we call? Is it just a normal market? Is that what I mean? Because
reasonably valued, overvalued, undervalued. If you were going to draw an analogy to the business cycle where we say expansion, peak, contraction, trough, expansion, peak, we there's that wave. It's not really a wave, but that's how we think about it. Yeah, you could develop a similar classification for stages.
In any case, here's what I do think is fair to say is that this is a market that by most valuation metrics is valued very highly at the moment.
Nosebleed.
The forward 12-month PE ratio, so if you take the price of the S&P 500 and divide it by projected earnings for the next 12 months, is running at 20.7. According to data from FactSet, the 10-year average for that multiple is 17.7. So even in a time where, look, in recent years, the last few years have had some high valuations because of 2020, 2021, 2022 have driven that average up. I think if you look at the average during the 2010s, it was closer to 16-ish, somewhere in that ballpark in terms of the multiple. But you're running at 20.7 times forward earnings right now. And there are a few different paths that you can lay out from here. The first is, hey, if earnings increase the way it's expected, or if earnings even grow faster than anticipated, then you have a case where this market doesn't necessarily correct in price, where it has to go down in price in order to, become fairly valued. It can correct in time, where you simply say, hey, the companies grow into these valuations, and you don't necessarily see a fall, but maybe the market just needs to move up more slowly than earnings do for the next, period in time.
Never happened, but maybe.
It can happen over short periods of time, and with individual companies, it's less. It really hasn't happened.
Yeah, when we say bubble, I think we mean the market as a whole.
Yes, it really hasn't happened with markets as a whole.
We always hold out that hope.
The other thing that we more typically see is that some negative catalyst comes along, and it's usually something that you're not expecting. It could be a pandemic in 2020. It could be a Chinese devaluation of their currency in 2015. It could be hanging the Greeks out to dry back in 2012, whatever it might be. In any case, something unexpected comes along, and the market says, oh, we've been pricing this like everything's going to be fine, but everything's not fine now, and we're getting a little bit nervous. And by the way, a lot of the money that's been used here has been leverage, and so we're all pulling back our leverage so that we don't lose our shirt and go out of business, and valuations come back into more normal levels. But historically, and you've talked about this a lot, Mark, it's rare that you see a new bull market born with valuations as high as they are. They're typically born at cheaper valuations.
Not just rare, it's never happened. a secular bull market. I'm not saying it can't. If AI is as revolutionary as some of its most optimistic exponents hope, then we could be on the cusp of a new bull market. What the heck do I know? If, on the other hand, we should temper our AI expectations, maybe keeping in mind the lesson of the internet, which gave us a nice boost for several years in productivity and growth, but also resulted in a bubble, which left a lot of productive things behind. There are some good things about bubbles. Academic research on this topic is kind of mixed. There are good bubbles, bad bubbles, depending on whether people anticipate them, which gets a little bit complicated. But the bottom line is it's not black and white.
So whether this is a bubble or not, I don't think is really worth talking about because there's not...
What would I do with that information?
If it is a bubble versus not a bubble, like what's the playbook there? I think what's fair to say is this is a market that's highly valued. It's not necessarily going to collapse tomorrow, but the idea that this is going to be a launching point for a new bull market for the next 5 to 7 years is challenging simply because the valuations are high, and that makes it harder for companies to have as long of a growth runway from a price perspective as you typically see most bull markets start from.
One thing you can sort of take to the bank, though, based on historical experience, and that's all we've got, is the sample of the stock market as it has performed throughout U.S. history. High valuations, high price to earnings, and other metrics, they are very highly correlated, very tightly associated with lower than average future returns. So maybe you don't bank on the 12% that stocks have given us from 1926 to present. Maybe if you're putting something into your spreadsheet, it's 8% or 7%. Maybe if you only have a 2-year horizon, you back off on equities a little bit because they are pricey and that makes them fragile. So there are some practical operational things you can take away from valuations as they stand today.
Let's take a quick break here. When we come back, we'll talk a little bit about the Fed and their next moves.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zada from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
So, yesterday we got some CPI data, and the best way I can describe it, it wasn't as bad as January, but it was still bad if you're hoping for continued progress on inflation. Both headline and core came in at 0.4% month over month, which, according to the math that I did, means that you're running almost a 5% inflation rate, which is, again, according to the math I did, higher than 2. Is that right?
I believe so, Chuck.
Okay, it's also higher than 3?
To the best of my knowledge.
And 4.
I believe so.
So it's pointing for the last 2 months, inflation is not in a great spot. And in particular, what we're seeing, overall is that by pretty much any available metric, and I've looked at a half dozen of them that are, trying to give you different ways to slice the inflation data to maybe get something positive out of it. By pretty much any available metric, inflation bottomed last July, and progress has stalled since then.
Guess what? We had a disinflation that was due to favorable supply shocks, the reverse of the unfavorable shocks. And forgive me for the technical term, that just means stuff that happened that's outside the immediate control of policymakers that either pushes prices up or pushes them down. Supply chain snarled up at the beginning of COVID.
And then they unsnarled. So you had a mirror image of what happened in 2020 to 2022 occur from mid-2022 to 2023. And the disinflation triumphalists, the people sort of celebrating, we were right, the Fed didn't have to do as much. Inflation took care of itself. I think what they missed on this is that the pendulum was coming back the other way. Like what supply shocks giveth, they can take it away. And I didn't see the favorable supply. I thought, Fed funds has to go to at least 6, and inflation is really embedded. Wrong. So favorable supply shocks took away some of that, but the trend in inflation, which is one of the reasons why we look at the median, because it cuts out the noisy stuff from month to month, the big ups, the big downs. Median has constantly suggested that underlying inflation is somewhere in the 4% range, annualized 3 and 6 months. It's actually running at 5. So it's good to be guarded when you're talking about this stuff. And a lot of the people you see on the finance channels and who write in Wall Street Journal and elsewhere tend to take extreme positions, at least the non-economists. Most economists should know better. It's like you always say, Chuck, one data point or even a few isn't indicative of a trend. You really need patience, time, and more observations. Jury's still out. And so when you look at, there's a piece that was written in Bloomberg today, and the headline is, Fed's data dependence fails when data isn't dependable. Central bankers shouldn't let month-to-month noise in consumer price inflation prevent them from cutting rates. You've got an awful lot of, I don't know if the term central bank apologists is the right term. It's believers in the immaculate disinflation.
Groupies, toadies.
Sure.
They like to suck up a little bit.
Yeah.
They get better access that way, right?
Sure. You got a lot of these pieces that are starting to be published now saying, hey, this is just a couple months, everything's going to be fine. And look, they may well prove to be right because I don't know what the next few months is going to show. But what I do know is that there is nothing in the data from the last 8 months now, dating back to July, that suggests any path to inflation getting below 3%.
Don't just throw out the term noise because it's quasi-scientific and expect us to swallow that. Noise is be specific. If you're talking about outliers, median and trim mean, filter those out. And they are signaling that the trend is moving unfavorably. It's still elevated. So journalists like to throw out pseudo-scientific-y, quasi-scientific-y terms that they heard in a conference call with someone who knows what they're talking about and expect that sort of hand-wavy, don't worry about it, it's just noise. Oh, thank God, it's just noise. I thought we were still screwed. Be specific. And when they do get specific, there's an answer to that shouldn't make people advocating continued miracle disinflation comfortable.
And to be clear, I don't think we're necessarily screwed. I just think that you might get to a situation where inflation might just end up running 3 to 3.5%, and that's as low as it can get with the current policy mix that you have, and that's not inherently awful. The 90s basically had 3% inflation for most of it, and you had a great economy then. But the Feds kind of pin themselves in with this 2% target.
Yes.
And so if you're saying, hey, we need to get inflation to 2%, and you can't do it, you either A, look impotent, or B, you look...
Sorry, I don't know why I laughed at impotence. It's not funny.
Or you look...
Apologies.
It's just something where it's okay. We're just wrong. It's one of those two things.
This is why Greenspan, and you can fault him for missing the deleterious effects of the bubble, particularly on housing, but he would not let members of his committee articulate a target. He said, if anybody mentions a target and it gets outside this room, I'm going to kill you. I'm paraphrasing, but it was close. He understood that you back yourself into a corner when you commit to a target. There are good academic arguments for it, but in practice now, it has straitjacketed them. Because as you say, the 3 to 4% inflation was the norm for the most part. Policymakers have always wanted to get it to 2, but they never articulated that. Now that they have, they look like failures. And I say we are up a creek because getting it to 2 might involve some serious economic sacrifice.
Right. Because
is that worth it?
The question here is, hey, you've got this 7-8 month trend now that's running 3 to 3.5% inflation. What is going to change in the economy to somehow just get you to 2%? Like, what's the catalyst to get there? Because the economy's kind of it's not really, it doesn't obey laws of physics, but hey, objects at rest tend to stay at rest, and objects in motion tend to stay at motion. It's kind of the same with the economy. Until disrupted by some outside force, you kind of continue on your path. And so if you're on a path of 3 to 3.5% inflation, what gets you the next 1% down?
Recession, unfortunately.
You're running higher deficits. You got inflation expectations embedded a little higher. How do you get there? Quick break here. When we come back, it's Wall Street Watch and Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi folks, Susan Powers and Chuck Zada here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, why is it important to build a financial plan?
Well, I think it's something that can give you some important guidelines as far as what you should be doing on a daily, weekly, and monthly basis in order to be able to hit those goals, and whether those goals are saving $100 into an emergency fund or trying to save thousands of dollars for a college education that may be coming in 15 years, you still need to have a plan for how to execute that on a daily basis in order to get wherever you want to be going.
So we know how fluid life can be, Chuck. What happens if you need to change your plan because your circumstances change?
Well, I think this is one of the most important things, is that a plan is just an initial guide for what you should be doing, but if things do change, you have to adapt that plan as well. So let's go back to what I was previously talking about with saving for college. If the picture for how expensive college is going to be in the future changes because of changes to student loans or things along those lines, you might say that you need to adapt your plan and change your saving strategy, and that's perfectly fine to do if the reasons, for doing so make sense and if the picture is different from when you initially started building that plan.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, following yesterday's rally where traders saw the S&P 500 notch a fresh record high, markets today are in mixed territory. Right now, the Dow is up by over 1/3%. S&P 500 is down by 3 points, and the Nasdaq down by nearly 0.5%. Russell 2000 is up over 0.5%. 10-year Treasury yield up by 2 basis points at 4.17%. And crude oil up over 2% so far today, trading just above $79 a barrel. Dollar Tree shares down by 14% after the discount retailer reported quarterly results that missed expectations. Additionally, Dollar Tree announced plans to shutter nearly 1,000 stores. Dollar General will post their earnings Thursday morning ahead of the open. Meanwhile, Wells Fargo cut its price target on Tesla to $125 a share, down from $200, where the bank said it sees risk to volume as price cuts are having a diminishing impact. That stock down by nearly 3%. Elsewhere, GE Healthcare Technologies announced a secondary offering of 13 million shares. That stock down by 4%. And Eli Lilly announced this morning that it's partnering with Amazon Pharmacy to help deliver certain prescription drugs, including weight loss treatment Zepbound. Eli Lilly shares up by 1/3%, while Amazon stock is up by 2/3%. I'm Tucker Sylvan. That's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
As promised, we are now joined by Todd Lutzke from the law firm of Cushing & Dolan for Ask Todd. We call the segment Ask Todd because you get to ask Todd your questions about your estate plan. So we've got the phone lines open at 888-205-2263. That's the number to call if you have a question that you'd like to ask Todd live on the air. We usually get filled up pretty quickly here. So again, please get calling at 888-205-2263 to make sure you get in line to ask Todd your question. That phone number again is 888-205-2263. Mr. Lutzke, how are you today?
I'm never better. And you?
A little bit sad.
Oh, boy.
Had to give away the vacuum cleaner yesterday.
What, it wore out?
It was just gathering dust.
Oh, yeah. You can't keep that.
Yeah, real problem. Real problem. Todd, I want to talk about life estates with you here today. What is a life estate?
So a life estate is really it's a nugget of ownership. But let me explain what that means. A life estate, if you picture a house or a piece of property as the entire pie, sort of reach in and cut out a little nugget of that pie, and you get to keep that. And what that gives you is a right to live there the rest of your life. You are considered now the present owner and the right to live there. You get to collect all the income from that property if you choose to rent it, and you pay all the bills and expenses because you're living there. But you really only own a little sliver, and that sliver is defined based on your age and an IRS table. So it depends on how old you are. The older you are, the smaller the value of that life estate piece is worth. In other words, if you sell the property, a portion will come to you based on the value of that life nugget that you kept. So that's, in essence, what you get.
Talking with Todd Lutzke from Cushing & Dolan. The phone number here at the studio is 888-205-2263. That is the number to call if you have a question for Todd about your estate plan or your lack of an estate plan. Again, the phone number here is 888-205-2263. So please get calling, and we'll get to your questions as they come in. Todd, when we talk about life estates, what are the pros and cons of using one as part of your estate plan?
These, interestingly enough, the pros and cons are probably going to take longer than the time we would have to talk about them. That's how many there are.
Give me your elevator pitch.
I'm going to give you the quick version of it. Is that there's probably more cons than pros. But you know, the problem you run into is when you calculate or create a life estate, you could be giving up control if you put the kid's name on it. And maybe that's the best way to explain it. There's two ways to do it. I call it a right way and a wrong way. The right way to create a life estate, if you're going to do it at all, is putting the remainder interest. Remember, you keep that nugget of life estate that we just talked about, putting the remainder interest into a irrevocable trust. I like that. The way most people do it that I don't love is putting the children's name on the deed as the remainderman. Because if they're on the deed, as the remainderman, now you've given up a lot of control, right? Let's just say a few items. One, if I want to change my mind, right? I give it to Billy and Sally moves in with me and is living with me and caring for me, and years go by, and I'm like, I want you to have the house. Oh, well, you better ask Billy because he might not want to give up his half. It's tough. You've given up some control. Think about selling it, right? If I want to sell the house and I've got 2 other kids' names on it, I might need their permission in order to sell it because I need all 3 to sign off on the deed. So that could be a problem. And then lastly, if it's not bad enough, think about how you might allocate the money. You might not get very much of the money based on the value of your life estate nugget. Remember, the older you are, the less valuable that life estate piece is. So you might not get the money you need to actually buy that new house that you want to buy or the downsized house. And the kids could get more. And yes, there could be adverse income and or gift tax consequences with it. But at least it'll protect your house from the nursing home after 5 years. And you will get a step up in basis. That's a lot.
That is a lot.
That's a lot.
Talking with Todd Lutzke from the law firm of Cushing & Dolan. If you've got a question that you'd like to ask Todd, the studio line here is 888-205-2263. We're going to take a quick break, but when we come back, it is right to your calls with Todd Lutzke. That phone number is 888-205-2263. One more time, it's 888-205-2263. Quick break, then right to your calls.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
All right, right to your questions with Todd Lutzke. First in the queue, we've got Philip on Cape Cod. Philip, what is your question for Mr. Lutzke?
Yes, good morning, Todd. My question is, we have a trust that was written up over 5 years ago. It has it's an irrevocable trust.
Okay.
It has multiple properties in it. And my question is it the trustee the only one? If I decide to sell one of the properties or multiple properties, is it just the trustee that is required to sign off on the property?
So, yes, the quick answer is if the trust is the owner, and it sounds like it is, the trustee is the one in charge of doing things for the trust. So the trustee can, buy and sell stocks and bonds, carry an investment portfolio. The trustee can purchase property. The trustee can sell property. Now, if you're the donor, the creator of the trust, Philip, and you have the power to remove and replace the trustee, you also kind of have the power to at least suggest or direct the trustee to sell it if you want it sold. So, yes, the trustee is the one that sells it. Make sure when you do sell it, though, that the money goes back into the trust. This is a big problem. I always tell clients that are clients of mine, of Cushing & Dolan's, and when you go to sell your house, please call before you sell it, because lots of times if they use just a regular real estate lawyer, for whatever reason, they'll take the property or they'll take the proceeds and give it back to the donor, like you, Philip. If you got the proceeds and deposited it in your bank account, you would lose the protection. So if you sell it for $500,000 and you get $500,000 and for 1 second it hits your bank account, you have to put it back into the trust. You got a new 5-year waiting period. Whereas if the money goes directly into the trust, you're going to have no new 5-year waiting period, and you can use that money to buy another house if you wish, or the trustee can invest the money. And finally, make sure that your trust is a grantor trust. So check with your accountant before you sell it, or your lawyer actually, and see if it's a grantor trust. Why that's important is from an income tax perspective. If you sell your primary residence, you still get your capital gains tax exclusion associated with that sale. That is $500,000 if you're married, $250,000 if you're single. It's going to help offset any tax bite. So please look into that. Folks, I hope that was helpful, number one, but I want to talk a minute about the guide that we're giving away. It's called Calculating the Consequences of a Life Estate. And it's interesting because, like with Philip's question, when the property is owned by a different entity, you have to figure out how to deal with selling it. Same thing here with a life estate. Generally, people take the house and put it in the hands of a child and keep the right to live there. So now you have multiple names on the property. So in that case, if you want to sell it, you're going to need multiple signatures. You may even need permission to sell the property from the children if their names are on it. Whereas Philip, in his case, he's the grantor of the trust. He doesn't need anybody's permission. He can just sell the property or remove the trustee and put another trustee on to get the property sold. So there are pros and cons with these life estates, folks. They're sometimes easy to calculate or easy to create, and many people have them. learn the right way and the wrong way to do these life estates. And if you have one, get it to find out which way you've done it. And if you want, you might even figure out a way to get out of it or undo it. So understanding these life estates, get the guide, 866-848-5699 or legalexchangeshow.com. You can download it there. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another caller for you here. Let's go to Eileen in Medford. Eileen, what's your question for Todd?
Hi, thank you. We have an adult family member with special needs trust. He's an adult.
Mm-hmm.
Another family member is the grantor. It's a revocable trust, but it reads that when the grantor dies, it becomes irrevocable.
Sure.
When that happens, does a 5-year look back go in because it's become an irrevocable trust? So would that person not be eligible for benefits or get kicked off Medicaid for 5 years?
So let's talk a minute. You're asking me about the special needs person, correct?
Yes.
Okay. So the grantor, let's just say, is the grantor like the father or mother?
Yep.
Okay. So let's just say the grantor, the parent, created the revocable trust, put money into it, and then when the parent dies, the money flows inside that trust to what they call a special needs share for the benefit of that child. Very common and done all the time. So now this child will be the beneficiary of that money. The trustee can use that money to better the life of the child, and the child will not be deemed the owner, will not lose governmental benefits, and most importantly, to your question, Eileen, it will not create any type of a 5-year waiting period. It's never the child's. The child isn't the one making the gift. It's just automatically protected in the special needs. I think you're in good shape with this arrangement.
Todd, we've got time for one more question with you. Let's go to Mark in Marion. Mark, you are on with Todd Lutzke.
Good morning, Todd. I have a Cushing and Dolan irrevocable trust I set up last year, January.
Great.
So this will be the first year I have to file the tax paperwork for it, and I'm just wondering what filings do I do? It's funded with 2 rental LLCs, so the only income is rental income.
Okay, so we've got the LLC shares owned by the irrevocable trust, correct?
Yes.
Excellent. And so since it's our trust, I'm able to speak to this a little better than I would if I've never read the trust. So even with Eileen, the caller, I don't know exactly what her trust says, but this trust is a grantor trust for income tax purposes. I used that word earlier in the show. And what that means is that Mark, you are considered the owner for income tax purposes. Great, because trusts pay taxes at a much higher rate than individuals, humans, right? Their rates are compressed. If they earned more than like 14 grand in income, they're in the 39% bracket. In this case, your rent will come in, you will file a Form 1041 income tax return at the trust level, reporting the rent, reporting the expenses on the return. Zeros end up on page 1 of that return. Nothing, no numbers. It will kick out, because you check the box grantor trust, it will kick out a letter. It's called a grantor letter. It's similar to a K-1. To the donor. Well, Mark, you're the donor. You're the owner. So you then will take all the numbers on that letter, and the numbers will simply represent the rent and the expenses, which is the exact numbers you put on the return. And you will put those numbers on your personal 1040. And you will pay the rent just like you used to pay the rent before. Or pay the taxes, excuse me. You will pay the taxes just like you used to pay. So income tax neutral, all this is going to flow onto your return, even if you don't physically move the money from the trust to your individual account. Doesn't matter. A grantor trust causes it to be reported on your personal return either way. So you are income tax neutral. Hope that helps. And if you need a little more guidance, just check the engagement letter and the closing letter that we sent you. It spells it all out in there as well. And you can give that to your accountant if you need it as well.
Mr. Lutzke, thank you for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutzke has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about the significant issues that life estates can cause, including the possibility of losing control of your estate. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Still more to get to as we continue with today's show, including an update on what is going on with the TikTok bill making its way through Congress. Also, we're going to be talking a little bit about what's going on in air travel as a result of Boeing having to scrap deliveries of jets due to, some quality problems they've been having. And then we'll also be talking a little bit about what is going on with some real estate trends across the country. From Boston to San Francisco, a little bit of look at some different markets and how they are behaving today. Quick break here. We got hour 2 coming up in just a little bit.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the use of life estates and your primary residence. Todd, does the 5-year waiting period for Medicaid eligibility apply to the creation of a life estate?
Well, the short answer is yes, it does. But let me explain why it does. So, first of all, when you create a life estate, again, the general way people do it is they tend to put the remainder interest of the property in the hands of children. I don't like it that way, but that's how they do it, when you could have the remainder interest with a trust. But the moment you put the child's name on the deed and you reserve the right to live there is a completed gift for gift tax purposes. No one thinks of that, but now you technically need to file a gift tax return. And it's that creation of the gift, it's that transfer of that remainder interest in the property to the child for less than fair market value that triggers the disqualification period for Medicaid. So that's why you have to wait 5 years after you create this life estate arrangement in order for the house to be protected from the nursing home. It's very hard to avoid the 5-year waiting period, folks. There's really not too many ways around it.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. You can get it by calling 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi Code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
With the stock market remaining volatile, it couldn't be more important to have a sound financial plan. I'm Mike Armstrong from the Armstrong Advisory Group. There are risks with any investment strategy, and that's why we've written a brand new guide to help you understand those risks and how they can be associated with any financial decision. It's called Building a Financial Plan, and it may help you recognize the potential risks and rewards that are associated with your investment strategy, in addition to offering insight into how to research making the decisions that are best suited for you and your family. The guide also provides information on how to establish clear financial goals and what steps might be needed in order to achieve them. Call us today at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zada and Mark Vendetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zada and Mark Vendetti.
A little bit after 11 here on the Financial Exchange. It's Chuck, Mark, and Tucker, and we got mixed markets today with the Dow up about 0.33%, 127 points. S&P is down 3 points, or less than 0.1%, and the NASDAQ down 69 points, or about 0.5% at the moment. Big things that we are seeing, kind of a reverse of what we saw yesterday. Semiconductor space just getting whacked with NVIDIA and company down pretty meaningfully at the moment. NVIDIA off about 2.5%, AMD down about 4%. So that's going on. Also, Tesla down about 3.5% as well. And those are some of your biggest companies that are moving markets negatively. When we take a look at bonds, the 10-year U.S. Treasury up 2 basis points to 4.17%. We got oil up $1.54 a barrel to $79.10 on West Texas Intermediate. AAA gas prices are up 0.2 cents today to $3.39 6 nationally. And then gold today is up $8.70 an ounce to $21.74 80. Mark, a little bit of big news earlier this morning. The House, I don't know if they finished voting, but I know they've voted enough that it's going to pass. The House has passed the bill that will either force TikTok to be sold from ByteDance, the Chinese company that owns it, or no longer operate in the United States. And I think it's important to talk about what's actually happening here, just because, you know, when we talk about misunderstood topics in the United States, you've got, you know, HIPAA, the Health Insurance Privacy and Portability Act. You've got the First Amendment. You've got the NCAA, like lots of stuff like that. But the First Amendment, I think, is one of the most misinterpreted things in the Constitution for being something that's very basic. The First Amendment allows individuals freedom of speech and to say whatever they want with protection from government prosecution for said speech. It does not allow a foreign entity to own a company that allows for free speech. That is something entirely different. So I see a lot of chatter about, gee, you know, this is, you know, anti-First Amendment. And no, it's not. This is not something that is saying that you are not allowed to have your voice on the internet. You can. This is saying that in the context of a social network, Congress is trying to put into place steps to prevent a foreign entity from exercising control over said network, and that's the concern.
Making a free speech argument is like saying China can buy a big facility next to a military base, but they could put an advertisement on the side, and making them remove the facility or divest their ownership of it would be a violation of free speech. The First Amendment was designed, as someone once pointed out to me, was intended to protect the pamphleteers. They were the
Yes.
press of the time, as we all know very
Yeah.
well, highly partisan pamphleteers. That's the intention. So to make that assertion is disingenuous, and anybody with a law degree, which I certainly do not have, but a plain reading of the First Amendment and a little bit of the history behind it belies that pretty clearly.
Yes, we do have rules about, the types of businesses that can operate and who can own them and so on and so forth. It's, as an example, if you want to, be a practicing doctor at a hospital, you have to have, a medical degree. We don't just let you go in and, hey,
learn on the job.
I've watched a lot of episodes of House, and it's not lupus. Because it's never lupus, except for the one House episode where it was lupus, and that totally threw me for a loop when that happened. You're not a big House fan, I take it.
I remember that line or that scene that may have been in a
It was
promo
lupus
for it?
once.
Okay.
It was lupus once.
No, I like House.
But
I
only
liked it.
once. Hugh Laurie is fantastic in the show. So I don't know where I was going with that. But no, we have
Me neither.
rules of the road that allow certain businesses to operate in certain ways. If you want to be a manufacturer for the Department of Defense, well, you got to go through a lengthy background check process for all of your employees and this and that. And finally, if you pass, all these, okay, you get to do that. Likewise, what this bill is seeking to do is, hey, if you own, a major social media network, you can't be owned by a foreign
Chuck,
entity.
Congress has broad authority. This is a settled issue. Broad
I know.
authority to regulate all
I know.
forms of commerce.
I know.
I mean, I'm not, as a sort of libertarianish person, I'm not comfortable with it, but clearly the national security concern in this instance trumps any concerns about, say, freedom of contract exchange, or even, dare I say, speech, though I think that's a red herring in this case. It seems to me, again, a plain reading. As an amateur, for what it's worth.
No one's suppressing any speech. They're just saying that ByteDance can't own the company
again,
that allows the speech.
By that logic, if China put an advertisement on a spy balloon, it would be violating their free speech to shoot it down. Of course, they're not citizens. They're not protected by the Constitution. This analogy doesn't really hold water, but it just seems preposterous. There's a security risk. Experts have made that determination, right?
Yes.
We all agree on that? Now, they may exaggerate the likelihood of the risk materializing, but even if it's only a 0.01% chance, given that they could be a military, they are an adversary. That's too big of a chance. Shut it down.
So,
right.
You've got this vote that is passing more than 330 votes the last time that I saw, so you got broad bipartisan support on this.
Yeah, it was only 65
it's not a Democrat
nays.
or Republican thing. It is, hey, most of Congress or most of the House was in agreement on this. It now gets sent to the Senate, where the question is, does the Senate pass this or any kind of amended version and send it back to the House? Which I think is an open question because obviously the dynamics in the Senate are different from those in the House.
And will Trump pressure Republicans to shoot it down? He's flipped on this. I don't know where Biden stands. I assume he's
Biden
for
said
it.
he would sign it.
Okay, so
Yep.
but Trump would not, and Trump exerts a lot of influence, obviously, with GOP senators. He kills bills.
You
know,
figure
regularly.
You figure that would have showed up in the House vote as well, though.
Yeah, it doesn't seem to have swayed them.
And it didn't.
Maybe because he only made a half-hearted attempt at opposing the ban on CNBC the other day, it was pretty incoherent. So it's possible nobody even understood it. Google it and listen to it. I challenge anybody to translate what he said. But maybe he's choosing to not really exercise the sway he typically holds.
So we'll see if this ends up getting approved by the Senate. But the House has passed the bill that would require TikTok to be divested from ByteDance. From or by ByteDance? Divested by ByteDance?
You're compelling them to do it. I would say it is by.
Yeah. For ByteDance to divest of them.
As opposed to being separated from... Yeah, I don't think that's the right...
It would require ByteDance to divest themselves of TikTok.
I think that's a fair way.
I'm glad we worked
Do we
out the
agree that
grammar
this is a
on this.
no-brainer? What is the argument against divestment? There's the free speech argument, which I think we've debunked. That's the speech is not the issue here. What is the economic or...
The one that President Trump brought up was that this would be something that would allow more concentration by Facebook, which it wouldn't. As long as TikTok gets sold to a U.S. company, there's no change in the amount of competition.
Well, by
out
that
there.
argument, we should let Chinese semiconductors and cell phones and cars in because we don't want, Tesla to dominate the EV market. Let's bring in the Chinese imports. That's not a coherent economic, in my view, argument against it. Is there an intelligible economic argument against it? Forgive me for being so judgmental, but
no, I have not seen any reason for ByteDance to be able to continue to own TikTok that I have sat back and said, oh, gee, that's interesting. Like, I've seen a number of them presented, but I haven't seen a single one where I've said, yeah, that makes sense, and there could be a real problem here. Now, the thing that is out there in terms of where this goes, even if Congress does pass this bill, you absolutely have to believe that ByteDance is going to, as soon as,
this will go to the Supreme Court.
This is going to end up at the Supreme Court when it's all said and done, because this is entirely new territory that we are entering in. So I don't know that it is settled law of the land, even if Congress passes this bill, that it necessarily ends up being able to be enforced the way Congress intends. I am not a lawyer, and I don't know anyone who's a good enough lawyer to be able to say, yes, this is definitely enforceable, and I've seen some questions online as to whether or not it would be enforceable.
What would you challenge it under? Have they gotten that far in this discussion?
Let me see if I can pull it up.
What constitutional right does it infringe upon?
I can't remember offhand. Let's take a quick break. I'll do a little bit of digging during the break, and we'll also, when we come back, we'll do a little bit of trivia, and I'll see if I can get some answers to that question.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit DAVMA.org. That's DAVMA.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi folks, Susan Powers and Chuck Sauda here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, when it comes to building a comprehensive financial plan, what components should you include?
Well, I think you have to look at all of the big ticket items to make sure that you're accounting for them. So things like, do you want to retire, and what's the timeline on which you want to retire? What's your plan for housing? Are you planning on renting and just allocating a portion of your income on a monthly basis to rent, or do you want to be buying a place, and that needs to be one of the goals that you integrate into your plan? Other things might depend on whether or not you have children, like saving for educational expenses or things like that. And then obviously, you might have other things that pop up along the way as well. Smaller things. Hey, do you need to save for a vacation next year, or things along those lines?
So what's the best way, Chuck, to go about defining your goals?
Well, I think you really need to think about what's actually important to you in terms of how you want to live your life. It's not so much a financial discussion at first, but more thinking about what you actually want to do with your life. So if you say, look, I'd love to spend my time down in Florida more often, okay, that can get you thinking about whether you need to rent a place down there, buy a place, or some combination depending on what your life circumstances look like. So I think that's a great place to be starting.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited. Dine in only. Well, a recent survey by the Greater Boston Chamber of Commerce Foundation found that 25% of residents of Greater Boston between the ages of 20 to 30 plan to leave the region within the next 5 years. Respondents cited higher rents, job availability, and the ability to buy a home as the biggest reasons for living. Boston is obviously the largest city in New England, but the region has other fantastic cities to relocate to. Trivia question today: what is the second most populated city in New England? Once again, what is the second most populated city in New England? Be the fifth person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the fifth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Isn't it interesting that despite people getting on a boat and traveling for like 3 months to get away from England, they still decided when they got here that they just wanted to name a bunch of places after the places they used to live in England?
Yeah. You see the, like, not only towns, but street signs and everything like that.
The one that's actually really funny is, so if you look at Boston and either Somerville or Medford, most of the street names in Somerville and Medford are the same as Boston streets. And the reason why was that back in the day, like the horse and buggy days, Medford and Somerville were the country. And so people often had summer homes in the country of, Medford and Somerville. And so they wanted to have the same street names that they lived on in the city of Boston. And so they basically moved those street names to their country homes 4 miles away on the other side of the river.
Makes perfect sense.
I think it's kind of cool, actually. Talking TikTok. Hey, that's good. Talking TikTok. I like that.
Not for much longer.
No, well, a couple other things, just to be clear. This is not a bill that is explicitly designed to just ban TikTok. It's designed to ban any similar service owned by what's designated as a foreign adversary.
It's crafted to survive legal challenges. So
they
do have lawyers drafting this stuff.
Other arguments I've seen towards, hey, why we shouldn't pass this, and this is from a few different people, the bill was rushed. It's true. It only got to Congress 4 days ago, the final version of it.
Next.
It's 12 pages long. If you and your staff can't digest a 12-page bill in 4 days...
Now, is it front and back, or is it just one?
12 pages.
Okay.
Like 12 pages. And we've all seen congressional bill pages. The font is big, it's double-spaced, and the margins are wide. There's maybe 50 words a page. I'm guessing the whole bill is no longer than 1,000 words at most.
That's a lot to ask in 4 days.
You should be able to digest that in 4 days. Other things, we already talked about, hey, is this a free speech issue? No, it's not. This is just saying that a foreign adversary can't own a major social media network that's being operated in the U.S. It would hurt small businesses is another one. A lot of people have, run small businesses off of TikTok. Well, okay, if ByteDance has to sell the company, how does that hurt the small business? Even if they have to shut down, there's other social networks
that's a political, not a legal argument.
Correct. And then the other one that I've seen is, hey, there's all kinds of data privacy issues. Why aren't we tackling them? Why are we just tackling this? And to that I say, look, if I'm going to have my personal data gobbled up, mined, and then resold by a large company focused on nothing but profits, I at least want that to be done by an American company.
My guess
that is subject to our laws and our restrictions on what can be done there.
Bills, correct me if I'm wrong, start with a constitutional rationale. It is within our power to do the following by this provision of the Constitution.
Sure.
My guess is this is not a data privacy bill. This is a national security bill.
It has some data privacy elements attached in there.
It may, but the primary motivation is to support national security.
Yes.
And Congress has broad authority, well established, not a lawyer, but even I know this, broad authority to legislate when it comes to national security, and the bill has been crafted accordingly. So those challenges are really lame.
If the Patriot Act holds up to that kind of scrutiny, something like this would, because that's far more broader and invasive in terms of what it actually did. So, look, would I love to see more done to protect the data privacy of Americans? Of course. But that's not what we're talking about here.
I'm just surprised that politicians who have the opportunity, from Trump on down, who have the opportunity to study these issues, it's been a known issue, presumably they get briefed on it. How could you not have an articulate, coherent position other than, and I'll pick on the former president's rationale, this might help Facebook, so I don't like it. Are you kidding?
Well,
this is supposed to be a compelling rationale.
The few people that have voted against this, it's on both sides of the aisle.
Well, he's the only one I heard.
Yeah,
so.
it's
AOC's
AOC voted against it
because it was too long for her to read in 4 days.
She said we didn't have enough time to read it. It's 12 pages. I just look at this and I don't have any convincing rationale that says, no, we absolutely shouldn't do this. Because there's absolutely no reason. And if you want the reason to do this, in my opinion, it's what happened last week where TikTok users got pop-ups saying, here's your congressional rep, here's who you need to call in order to stop this bill from happening. And it was done through TikTok using location data to identify who the reps... this is the whole data privacy thing.
If you were to construct a stunt, if you were anti-TikTok and you wanted to construct a stunt to show people how dangerous TikTok
you would do what TikTok actually did last week. Because think of it this way. If the bill at stake this time is, hey, we want to, force a sale of TikTok. Okay. Let's say that hypothetically there's some type of Chinese military action in the next 10 years that the U.S. may disapprove of. And TikTok sends out a similar thing. Hey, call your congressperson to tell them to vote against Bill X because it'll authorize defense spending for this cause. This is the problem.
We're too principled sometimes. The notion of freedom of speech and contract, these are all wonderful ideas, but they always yield to exigencies. And sometimes we're a little too formal about this stuff.
Well, this isn't a freedom of speech thing, though.
I know, but people are invoking these high-minded principles, and I sympathize. But this, again, is a clear, present, imminent threat to national security. The rationale for not doing this has to be really, really persuasive. And the arguments, I can't read the bill, it's too long. It might help Facebook from a presidential candidate. These are lame arguments, and these people should be embarrassed.
This is actually kind of wild that, again, there's some really weird voting coalitions that are happening on this, but you have AOC and Marjorie Taylor Greene both voting against this bill, saying it's not good for America. These are not people that normally agree on a whole lot. There's some...
Well, they have something in common, though. They're both news channel performance artists and not serious legislators.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zada from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today was, what is the second most populated city in New England? That would be Worcester. The top 5 most populous cities in New England are Boston, Worcester, Providence, Springfield, and Bridgeport. Winner today of the Financial Exchange Show t-shirt was Corey from Tiverton, Rhode Island, and Corey's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
Airlines are cutting flight schedules because Boeing can't deliver the planes that they were supposed to. And the reason that this matters and why airlines are cutting flight schedules is this. Average airliner has a lifespan of about 30 years. Usually gets a big refresh about 15 years through, but 30 years is the expected lifespan of an airliner. So if you are Southwest, as an example, who has a fleet exclusively of Boeing 737s, it is fair to say that some of those were likely bought in 1994, and you said, okay, we're going to have new ones delivered, and these are going to get phased out. Boeing can't deliver all the planes that they promised they were going to deliver this year, and so Southwest is faced with, or any of these airlines are faced with the question of, hey, this plane is, reaching its maximum lifespan. Is there any way to string this along for another couple months or whatever, or do we just phase this out and it is what it is? And so Southwest yesterday said that they're going to cut flight capacity and reevaluate their financial guidance because they're not being delivered the jets that they were supposed to. The stock down 15% as a result. Just, the spillover from Boeing's inability to deliver jets safely.
This is the right thing to do. In the short term, you don't want planes dropping from the sky. So long term, this should be good for, I'll just say business and not try to get too fancy because I'm not qualified to opine on
business
Southwest
for
Financial.
Southwest, you mean?
For airlines generally. I mean, it's them now, but it's going to be others.
Sure.
Presumably they're unique in that I guess it's all they fly. But this is the right short-term decision, and the stock's being punished for it. Presumably, though, again, this is going to get resolved. They're going to go buy planes from somebody else,
right?
Or Boeing's going to fix their cultural issues.
Right. Southwest will say, okay, we're going to lease these planes from, a large,
figure it out.
A lesser.
They'll figure it out.
They'll figure these things out.
So long run, should it affect the share price, or are we assuming they're going to lose? Look, again, there are analysts who follow this intimately, and so I'm a bit out of my depth. But in the long run, how does it adversely affect them financially? I don't know.
I kind of end up in your camp.
Nice.
Which is always good. Boeing also did say, I'll say in this Wall Street Journal article, Boeing on Tuesday announced a series of steps aimed at improving quality, including performing compliance checks and quality audits at their 737 factory. I'm glad that they're doing that now. It's nice to know. The one that we talked about on Monday, it also vowed to curb a practice called traveled work when manufacturing work on planes is completed out of sequence. That would be, if you're building a house and you say, hey, let's run the plumbing first before framing it, not a great idea. You don't just come back to the frame after you do the plumbing. It's kind of hard to suspend the plumbing from nothing also, but that's neither here nor there.
Is there anything better than sitting on a beautiful beach watching the sunset with an ice-cold drink? Well, you can experience that right now by booking your next vacation in the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to visitusvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands is everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Survey released Monday by the Greater Boston Chamber of Commerce Foundation found that an alarming 25% of Greater Boston residents between the ages of 20 and 30 plan to leave the region in the next 5 years. And the Boston Globe covers this and said, hey, this is something that could be a real problem for the area. The problem is that we have no historical data on what percentage of people historically have said this, and people in their 20s generally are among the most transient groups geographically in the country. I can't tell you how many people, moved here that I knew, moved here right after college, and by the time they were 25 or 26, moved somewhere else because of work or other reasons. And so, sure, 25% of, people aged 20 to 30 are saying that they're going to move out of the Greater Boston region, but I don't know if that's a lot or a little, or if those people actually end up following through on it.
Yeah, being a little Massachusetts-centric for a moment here, I apologize for that. Our unemployment rate here in Massachusetts, which is where we broadcast from, and it's a similar story in other New England states, is 3%. So job market's great. My first reaction to this was kind of similar to yours. This doesn't feel very rigorous. These types of surveys generally aren't generalizable because of the way they're conducted. So I'm not sure if it's indicative of some sort of trend building among younger people. But even if it was, the market will fix it. Wages would go up for people with the skill levels on average of those who are leaving, and it'll call more into the labor market. So this might be an interesting, cultural phenomenon, younger people wanting to move to lower cost cities. Good luck, though. Every city in New England, all the major cities, are desirable and expensive, and that's a good thing. You don't want to live in Gary, Indiana in 1975 as it's starting to slide into oblivion. So this is not a bad thing if indeed this survey's results are reliable.
Interesting. I just want to touch on one other piece from this survey. 39% of those who plan to leave Greater Boston say that they had difficulty building community. And I do think that there's probably some truth to that if you're not from the New England region. I didn't realize it until I lived a couple other places, during college and things like that, just how provincial New England can be. I'm from the area, and, I can say, yeah, I grew up in Massachusetts and so on and so forth. But for people who, come in from other places, they're very much viewed as outsiders and talked about differently than if you're from the New England area. It's worse in different parts of New England and different communities in New England. But I will say, New England is not a place that sees someone, just move from Tennessee and is like, hey, great, someone from Tennessee. It's kind of like, oh, someone from Tennessee's here. It's a little provincial. I'm not saying it's bad or anything. It's who we are.
Other than California and Florida, Southern California, Florida, where lots of migrants, I think you find most places are sort of provincial, as you say. Maybe are we exceptionally? So I don't know. We've only lived in. I don't know.
I've heard just from other people who have moved to Boston the same thing. I'm not from here, and no one really looks at me the same as if I were from here. It's just it's how we are. You talk to anyone from Maine as an example, they still bristle at the fact that Maine used to be part of Massachusetts. You talk to some people from Massachusetts.
Jeez, don't tell Putin that. He'll have us invade them.
If you can't trace your lineage back to the Mayflower, some people are like, oh no, you're not from Massachusetts. It's kind of our thing. It's like, okay, we're one of the original states. I get it. I'm not saying it's bad or anything. It's kind of like we're aggressive drivers. It's just who we are.
Cool. I wasn't born here, so I get it. But I've lived here for about 25 years. The other half of my life spent in Rhode Island, which is close, but it's not. It's not Massachusetts.
Yeah. So I'm not saying it's bad or anything. I'm just saying that it is. And there's some people who say, yeah, I want something that is different from that.
Civic pride's healthy. It's a good thing, right?
I do think it is.
I'm not saying you said differently, but nothing wrong with being proud of where you're from.
No, I'm not saying it's inherently bad. I'm just saying, yeah, I can understand why some people who aren't from here say, yeah, it's not for me. It's fine. It doesn't have to be.
Yeah, screw you.
Get out.
Yeah, leave.
I guess there's that approach too.
Yeah,
and that's exactly what I'm talking about.
That's the Rhode Island in me.
There we go.
Okay, leave.
So thank you for the example.
Yeah, good luck.
Thank you.
Thanks for the food. Get out.
Why don't we take a quick break here, and when we come back, we'll do a little bit of stack roulette right after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
Mark, what do you have for Stack Roulette?
Article in the Wall Street Journal today, guys. We still don't believe how much things cost. I'm sorry, it's the Journal of the Times. This is a journal, right? Yes. Excuse me. Anyway, what's the difference? And the point of the article, we researchers have struggled with why more people aren't answering positively when asked about the state of the economy. Growth was strong last year. It continues to be reasonably strong, at least relative to trend. Inflation is still elevated, but it's come down. And the article gives a bunch of examples of things that have increased 50 to 100% in price, things we're all familiar with, deodorant, little stuff that you buy frequently enough that it registers. And this is how we formulate
I buy my
expectation.
deodorant in bulk.
I do too, actually.
Yeah.
Seriously?
I need to. Yeah.
Because you stink?
Because I stink.
Okay. Very good.
No, because it's the type of thing that's annoying to run out of. And
Yeah,
you
and it
actually
gets-
you can't afford to run out of deodorant.
And being Italian, it gets 60 degrees and I start sweating. So it's a thing.
We're both sweating bullets right now.
Oh yeah, that's why we keep the heat at 52 in here.
But it's definitely not it's definitely not people's imagination. Very conspicuous categories like energy. Now, overall prices are up about 20% from the beginning of 2020 to now. Energy prices are up 50% more than that, though, and that's a broad category, everything from stuff you use to power your furnace to gasoline. So energy prices up 50% more than prices on average. Food overall up 25% more. And then various food subcategories, food away from home, meat, fish, poultry, and eggs up 25% more than the average is captured in CPI. Transportation up nearly 50% more. That's everything from airfares to insurance to costs of keeping your car on the road. So all these very conspicuous prices, things we interact with routinely, are up way more than the average, and they're concealed by the average. But it does, to me, explain why people are still down on the increase in prices and thus on whether or not the economy's on the right track in general.
I want to talk a little bit. Did you guys cover the story yesterday from the Times about car companies sharing driving behavior data with insurance companies?
Talked about it a good amount.
What do you guys have to say about it?
Well, Mark,
as long as it's voluntary and disclosed, I welcome the opportunity to lower my insurance costs. Not opposed.
I land in the same spot.
Oh.
The problem is, in most cases, it's not voluntary and not disclosed.
That is a problem.
And that is the problem, is that you have insurance companies that get this data from automakers without, you telling them that it's okay. And they say, oh, well, you braked hard X number of times this month and you had this many, high acceleration events, blah, blah, blah. And look, at this point, I'm concerned with one thing, and that is, well, two things. Getting from point A to point B safely and minimizing the amount of gas that I use on my trip. So I drive very, very slowly. I'm the guy, if you're on 128, I'm in the third lane from the left. I'm going about 63 miles an hour in order to maximize my fuel economy. And I'm really boring right now. It's the opposite of how I drove in my 20s.
I'm in the left lane.
I know.
I'm getting the hell
You're
home.
in a hurry to get things done. Rushing and rushing
You can
until
tell
life's
by
no
the
fun.
but you tell by the type of car people drive. I won't mention the manufacturer unless you do.
No, I drive a Subaru Outback. I'm boring.
I'm a VW.
Everybody who drives a Subaru Outback drives like you. Toyota RAV4 as well. You don't want to be behind these people.
We did this. We did a study with my daughter, and I told her, like, Subaru Outbacks are like, they're the cool dude car, and she just did not believe me. She was like, I'm not sure. And so we decided to count, like, how many cool dudes versus old dudes, where they're driving Outbacks, and it was about a 9-to-1 ratio of cool to old. So I lost. I'm old now. That's what happens, I guess.
So what do you get with that miles per gallon, if you don't mind me
I get
asking?
like 31, 32.
And this is an all-wheel drive drivetrain.
Yeah.
So that's excellent.
Yeah, 31, 32. Listen, it doesn't have a whole lot of pep. It's a little bit of a step down in the pep from my WRX that I used to drive.
Well, that's not a fair comparison.
But hey, I'm trying to make my life as boring as possible right now. And there's no better car for that than the Subaru Outback. It's the best thing I can say about it is that it's boring.
That's what you want in a car, though.
Most
of us do.
I'm like, I think this it's what I want in a car. It gets me from point A to point B. It's safe. It works, and the mileage is pretty good.
I don't want unpredictability and mystery in my car. When's it going to start today? I don't know.
Right. If you want that, get a Jaguar. The electrical systems have been on the fritz for the last 60 years. So is it okay that automakers share my driving history with insurance companies? If I have the ability, taking delivery of the vehicle to opt in or opt out, and if along the way I can opt in or opt out, on an annual basis or something, fine. I can understand why they don't want you to be able to opt in daily, because then you could say, hey, this is going to be my fast driving day.
Yeah,
and like, you know,
I'm running late or something.
right.
Yeah.
You could do like the whole moral hazard thing. And I can understand why that's not good. But hey, annually you get a letter from your manufacturer, an email or whatever. Do you want to continue sharing your data with your insurance company? Okay, I have no problem with that, but that's not how it works today. I got one other story I want to share, if that's okay.
Yeah.
Did either of you happen to see Nick Saban up at Capitol Hill yesterday?
I didn't know.
So there was a whole panel discussion about, you know, the NCAA and the name, image, and likeness rules, NIL rules, about, you know, how college athletes can earn money based on their name, image, and likeness now. And Saban, you know, made the point, hey, like, this is all that, you know, this is all that, you know, athletes are talking about now when I go to try to recruit them is, you know, how much money can I get? And, you know, a bunch of people, including Scott Van Pelt, who is, you know, the Night Sports Center guy, who I generally really like, you know, kind of took Saban's view and were like, yeah, like, this shouldn't be all that you're asking about, you know, in terms of deciding where you go to play football and blah, blah, blah. Like, it's got to be about more than that. This morning, the Nebraska athletic director, who had just agreed to a brand new contract with them, is going to Texas A&M, who's paying a $4 million buyout in order to bring the athletic director from Nebraska to Texas A&M. So in the span of 2 days, you go from, oh, you know, how could these college athletes just be all about the money, to, hey, we're going to pay a $4 million buyout to bring you over as an athletic director. Guys, it's America. I'm not saying that money is the only thing that should matter, but acting like the ability to, you know, say, hey, how much are you going to give me as, you know, for providing my services is a bad thing. It should be the first thing a Division I football player asks, is how much are you going to give me? If you are, you know, playing tennis at the collegiate level, probably not the first thing you should ask, because A, you're probably not going pro, and B, there's not just a lot of money in college tennis. There is in college football.
They can push back on scholarships, right, Chuck?
Sure.
I know you know this area well. You have firsthand experience.
And you should be asking, how much are you
Can
going
you give me
to
more
give
for
me?
room and board? Can
Yes.
you give me more per diem? Right? So they are negotiating
this
for
idea
money
that
now.
college athletes are somehow like greedy for bringing that up as a thing of key importance. Okay, go into a job interview and don't ask about the salary. Because you just want to go to a company that's the right fit, right? The salary doesn't matter. Okay, try that out. Let's take a quick break for the rest of the day. When we come back tomorrow, we'll have more Financial Exchange. I don't even know what we're going to talk about. We'll see you then.